Hey everybody, Boris speaking Forex. Welcome to the crosses section for Feb 18th to Feb 22nd, 2019. A couple of really interesting ideas here on the commodity front and also, I think, relative strength as far as cable goes. Really, actually, all the cross trades this week are effectively commodity dollar based thematically, but in very, very different formats. So Kiwi Swiss, interesting to me very much because we're now at multi-month highs. We're knocking on that 69.50 door. We take that out, it really creates a very, very easy run towards 70, perhaps 71. I'll show you this on the charts. Whenever we get very close to multi-month highs, multi-month lows, those are seminal levels, and the tenor of this particular trade looks quite good because we've just been continuously bid for the last 3 days. Kiwi looks very strong, and if we get any additional positive risk-on flows into the front of the week, this looks like a prime candidate for a move towards multi-month highs. Yen crosses. So the yen crosses are kind of a existential dilemma at this point, because if you're not bullish yen like I am not, there's certainly a danger here that the yen could come down and drag everything down. On the other hand, a positive view on the yen, or at least sort of a neutral view on the yen, really provides, I think, Aussie yen as the best sample out of all the yen crosses, because that's been trading in a very slow but very definitive fashion to the upside. If dollar yen starts to trade to the upside, Aussie is not going to lag much behind, and I think you have a very reasonable chance here to go towards the 79s and perhaps even towards the 80s on the resist point. I'll show you in the charts and how it's making a very nice smooth turn to the upside, and definitely worth a look if you're bullish any of the yen crosses. This is the best sample in my opinion. And then finally, pound CAD, which is usually a very, very high volatility pair, has not been that big of volatility. I mean, a 100-point range is nothing for this thing, but it seems to be trading in that range. But what's interesting here is we're at a very clean, clearly defined double bottom. And the idea here is that if you trade velocity, the velocity in cable to the upside is going to be much higher than the velocity of caddy to the downside. Caddy has been stuck in this mud. We don't really have any seminal news that's going to move caddy. On the other hand, we have Brexit news every day. And as I said, the market is really betting on the idea that basically soft Brexit either gets done or get delayed. One way or the other, that's mildly positive cable, or possibly very positive cable if they get a deal. So the run in cable through the 29s, possibly 30s, certainly carries us to the 71.50 on the resist in pound CAD. Let's take a look at the charts here and let me show you what I mean. So here's Kiwi Swiss. This is interesting because, as you can see, we are now at multi-month resistance here. This is the 69.25, call it 69.50. But we are knocking on this resistance. So we take this out, it makes it very, very easy for a move towards the 70, which is a key round number level, and then even beyond that towards the 71s. I can zoom out and sort of show you how we don't really have a high until April. 71.31 is the April high. We've recovered this very, very massive move here. Big wave, small corrective wave, higher low over here, and now just looking ready to burst. So technically and structurally, the price action was quite good. They bought the bottom here. It would have been super bullish if we closed on the highs. We close only maybe 10% off the day's highs. All of this just sort of suggests there is momentum in this trade. Clearly 5-6 days of buying. Buyers really want to run the table here. So if we can take out the highs here, it's going to squeeze out a lot of longer-term shorts who have, swing high stops here, and that roll in the stops could possibly move us all the way out towards 70s. Remember, also we had a crazy price action in dollar Swiss to the upside at the beginning of this week's trade on Sunday night in very, very thin markets. But all of it just kind of building up to this potential move in Swiss crosses to the upside. Certainly, Kiwi Swiss respects the biggest trade here because of the strength in the overall trade over the last couple of days. And here's pound CAD. And you can see how clean and clear the double bottom is over here. Very well defined double bottom right underneath the 170. 170 also a big round figure, so it continues to really attract buyers here. And Friday's reversal here confirms that this is indeed now a double bottom. It'd be perfect if Monday, Tuesday we start crossing this 500 SMA and close above that. That really would send a very bullish signal. Remember, whenever we move through the big long-term moving average, in a strong fashion, that's generally a pretty decent signal of further upside momentum. Always a very volatile pair because, of course, it's going to be based on Brexit news. But if you assume, as it looks like the market is assuming, that Brexit is going to resolve in some mildly positive fashion, one way or the other, as I said, the velocity in cable is going to be much faster than any kind of velocity in caddy, and that takes us to 71.50, possibly even 72 on any kind of a move higher to the upside. So that's pretty much the crosses as they stand. Kiwi Swiss at seminal multi-month highs, Aussie Yen as kind of an interesting take on the yen crosses, and Pound CAD as a very clean, clearly defined double bottom with the assumption that things are going to work out in UK. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.